Welcome to the Old Capital Real Estate Investing Podcast with Michael Becker and Paul Peebles. During this program, you will hear interviews with real-life successful investors who will share their stories and provide useful advice on how to acquire, finance, and operate apartment complexes. Now, here they are, Mike Becker and Paul Peebles.
Welcome to the Old Capital Real Estate Investing Podcast. I'm your host, Paul Peebles. Normally with me would be Michael Becker, but Michael is in Dallas and we're in Austin with Dave Walls, also with Old Capital. So we ventured down to Austin, Texas to spend some time in the Austin market with some folks that we've done some transactions with, and I thought I would probably do is kind of introduce them and to hear a little bit about their stories and talk with them a little bit about how they got into the multifamily apartment business and talk a little bit about their successes. And I think everybody likes to hear successes and also like to hear some challenges. So we'll kind of talk a little bit about some of the challenges too. So we're actually sitting in their office that they have 100 and how many units in this property?
192.
192. That is Terry Matheny. And sitting next to Terry Matheny is his partner, Susan Matheny. Thanks for joining us.
Thank you. Hi.
So I thought what we would do is kind of talk a little bit about this property. Let's talk a little bit about some of the other properties that you own. Terry owns a number of properties in the central part of Texas, and talk a little bit about his successes and some of his challenges too. So everybody meet Terry and Susan Matheny. Terry, Susan Matheny, meet everybody.
Hi, Paul. Hi, David.
Everybody.
So Terry, tell me a little bit about your background. Before you got into multifamily investing, what did you do? What is your background?
I was a computer engineer. I guess I still am. I just don't practice anymore. Started off actually in the petroleum industry back in the day, then moved into computer engineering. Spent 25 or 30 years doing that and retired from that in 2013, actually. I worked actually for a company called ARM, which you folks have probably never heard about before, but you definitely use all of our products, and that is all of your cell phones, all of your car electronics, all of your TVs, all have our microprocessor design in there. So that's the company I worked for. It's a British-based company that had an office here in Austin that I worked in.
So are you originally from Texas?
I was born and grew up in the Houston, Texas area.
Okay.
And I've lived in Austin actually for the last 25 years.
Did you go to University of Texas?
Actually, I went to the commuter school, University of Houston, to get my undergraduate, and then I got a graduate out in the West Coast at USC. Took about a year and a half to do that, and then I promptly headed back to Texas.
Fantastic. So let's kind of talk a little bit about real estate and what turned you on to real estate. And now you're in the multifamily. Did you guys look at other things before you got into multifamily?
We got interested in real estate as a way out of the regular 9-to-5 or 9-to-9 job that a lot of people have. And we started looking at single-family homes. And we actually bought a few single-family homes around Austin, all the way out to Kyle, Round Rock. And it was a lot of back and forth. And that sort of led us to say, hey, how can we consolidate our effort, economy of scale? And that's what led us to multifamily, was all the traveling around while working.
How many single-family homes did you buy?
We had 4 single-family homes, and now we have 1. We sold all but 1.
So the single-family homes that you own, did you manage them too yourself?
We did. We self-managed.
So when you had one of the 4 units go vacant, it was 25% vacancy.
Yes, exactly. And we'd head out there with our kids and scour the neighborhood, look for the best house that was for rent, and make sure that our curb appeal was better than that one. And we knew we had it built on the inside of the house, but that's how we did it. We fixed it all up and made it the best in the neighborhood.
All right, let's make the transition. So you guys were doing the single family business, which a lot of people do, is the single family stuff. And then how did you guys get into multifamily, from single family to multifamily?
What actually led us the whole thing to begin with really was reading, well, like a lot of folks do, reading Robert Kiyosaki's book, Rich Dad, Poor Dad,
Yep.
which kind of set the whole mind straight on getting away from earned income into passive income. And Susan alluded to especially my 9-to-9 job per se, and looking at maybe never being able to retire really. Mm-hmm. So looking at ways to say, how can I control my future? And so that's what it really boiled down to. And Paul, I'm sorry, your question was?
How did you make the
transition to multifamily, right? So I'm a pretty voracious learner, I suppose. And there actually are 3 or 4 books we got through Barnes and Noble or Amazon or whatever that actually talk about investing in apartments. And so I would buy all sorts of different books and investing in so many different kinds of real estate transactions. And originally we toyed with the idea of maybe investing in small office buildings or strip centers.
By yourself or with other partners?
Well, at the time, this was all by ourselves, thinking that, we had to start there, if we could do that or not. But then it all ended up boiling down to something you alluded to a while ago, is residential, and with, in this case, a 192-unit apartment complex, I can have 19 vacancies and still be at 90% occupancy. If I have a 4-unit strip center and I have a specialized butcher shop maybe that goes into one there and it's vacant, I'm 25% vacant, and who knows when I'm going to find the next butcher to move in there. So that's what turned us to multifamily from other commercial ventures instead. And the whole idea of there was, I knew I couldn't do it one at a time with single family. So I knew I wanted to move into bigger commercial type real estate.
So that kind of created the mindset of what you wanted to do, and that you had an opportunity to read a bunch of books, talk with a bunch of people, and you said you wanted to do multifamily. What was the trigger? What got you into the multifamily business? Was it a real estate investment club?
What we started doing, we tried to find what kind of things were on the market in our area. We spent one Saturday, multiple, but one Saturday driving around and looking at our very first transaction we did was a 42 unit here in Austin, and driving around looking at it saying, oh, so that costs that much. Okay. So that's the realization of we need a lot more money than I thought we would need.
Yeah.
And then you read the books and they talk about, gathering your friends and family and acquaintances and pitching it to them, and da-da-da-da. And that doesn't go very far if you don't have any particular credibility to your record at that point at all. So on one of these trips, we came across a radio show that talked about an organization that was based out of Houston that was opening an office here in the Central Texas area that specialized in multifamily investing and mentoring. Not investing really, but mentoring people how to buy multifamily properties and run them.
Like an education club.
Exactly. And it was exactly what we needed, because we were able to go there. We took the classes, and the fact of the matter is that there are a multitude of ways that you can do a real estate transaction and run a property and whatnot. But Susan and I had come to a conclusion on our own about what would probably be the best way to do it. And this club teaches about 97% of the way that we had already come to, so that I validated them or they validated me. I'm not sure what it was, but I knew that was a proper fit for me. And then the second thing is being amongst others that are like-minded with you boosts you up, and then that was what allowed us to then gather friends and family that we were able to invest with, that knew what we were doing, that wanted to do the same kind of thing, that wanted the same benefits that we had in the market, and that was what allowed us to get our first property.
Another thing is, this was around 2008, and we were in the stock market and feeling really nervous about where things were going. So before the big crash, Terry said, I think we should just pull out of the stock market and have these funds and buy real estate. So that's what we did. We pulled our money out before the crash, and so we had that cash there just waiting to invest. It took us a couple of years of looking, but we finally found our first property in 2010.
That was in Austin.
That was one of the properties that we looked at before we had joined this investment group, and we walked this really rundown, awful property going, how can we buy this? And eventually we were able to actually buy it, turn it around, make it a beautiful property, win an award on it, and sell it.
Unbelievable. So I'm glad that you told us a little bit about the backstory about how you got into the multifamily business. Let's kind of fast forward to today and talk just about a few different properties that you guys own right now. How many properties do you guys have? How many units do you guys totally own with your partners?
We have two properties. One is 192 units and the other is 248.
That's a lot. Both of them are in Austin, or how many are in Austin?
So the 192 we're sitting in right now is in Austin, right? And the 248 is in College Station area.
Okay.
As well as, in the same sense that we have investors with us, we are investors with others in some other properties in Corpus Christi and San Antonio and Houston and Austin as well.
So you guys probably own and manage together with other people 1,000 doors?
Yes,
1,500
over 1,000 doors.
Wow. So that's gone a long way, going from 4 doors to 1,000 plus doors. And so you have the stripes on your back to show you that it wasn't easy, but you were able to do it.
It's not easy, but anything easy isn't necessarily worth attaining. It's hard work, but it is totally achievable work, and it is totally doable if you have a process and a system in place and you follow that. So it has been quite rewarding to us.
Let's talk a little bit more about the units that you guys currently own and manage yourself. That we have 2 properties here. How would you describe your business model? Would it be buying stabilized properties or value-added properties, or maybe a little bit of each?
Well, it's kind of a little bit of each. We go in thinking it's going to be a stabilized yield kind of property, and then we always find value to be able to add to it. Mm-hmm. So it's been a mixture, but mostly we value add, and we have our signature things that we like to do to properties to make them look nice and be what people want to rent. So.
Okay, we'll talk a little bit about some of your signature items that you do. And so let's kind of have Dave take over, talk a little bit about the Retreat Apartments in Bryan, Texas. Dave, talk a little bit about that.
Right. Well, Susan and Terry, the Retreat Apartments, why you were originally owning properties in Austin and running properties in Austin, what made you, first of all, go down to Bryan, Texas, College Station area? What kind of drove you down there, and why did you pick this property to buy and to do the work to?
Right. So this is the Retreat at 2818. It's in Bryan, and it's on FM 2818, hence the name, I suppose. This is a property that we bought it from a fella who had bought it, I believe, out of foreclosure from a Fannie Mae loan. So it had been in fairly bad shape, and the guy we bought it from had brought it from pretty bad shape up to pretty good, right? We bought it, and we could see the much more potential in it to take it from pretty good to very good, if not excellent. It is in a well-traveled area. It is a beautiful property. It used to be called The Oaks, and it is situated on 18 acres amongst all the oak trees up there in Bryan. But what we saw in it was a couple of things. Everybody knows the Austin market really is pretty much on fire, and that means that the valuations of properties of all types here in Austin have gone up a lot. And so where we were used to getting a certain level of cash-on-cash returns, it was more difficult to find that here because prices were higher and you had a heck of a lot more competition from especially people in the stock market or in treasury bonds making 1%, having money to say, I'll put it anywhere other than in a bank or the stock market or treasury bonds, for instance. So there's a lot more competition, and so we thought we'd kind of get out of Dodge a little bit to see if we could take our model elsewhere and execute it elsewhere. And so this property, like I say, was one that needed some of our signature touches that Susan can talk about. And on a value to yield play, 0 to 1 with yield being a 10, this was probably a 5 or a 6 maybe. So we did have some physical repairs and rehab for the value, but a lot of what our value we offer, we think too, is just in the management and the running of the property. And I think that's overlooked a lot, that a value play isn't just a rundown property that needs physical work. A value play can also be a property that's in pretty good shape. It just needs to be run properly. And that's a lot of the value we add as well.
Was the property listed for sale?
Yes, it was a Marcus Millchap listing. And actually one of our other buddies from this group had mentioned it to me. It didn't actually come across my inbox. He had been looking elsewhere in Corpus Christi at the time, and he mentioned it to me, so we went out and took a look at it.
Any idea why the seller was selling the property?
Yeah, I mean, the story I understand is that he was mostly, I think almost all his properties he would buy as a lone wolf and buy them on his own and run them on his own. And this was a property that he took on a partner for one reason or another. And I think that partner was kind of saying, I want my money out, I want to get out. And so I don't think he was at the end of the owning period that he wanted to get it to the particular point he wanted to get it to, but he felt he needed to get out of it just to satisfy his partner. So
very competitive in Austin, very competitive in College Station, Bryan College Station. Texas A&M University is there. any students, very much students on the property?
Not yet. Actually, it's been pretty much a conventional property. We haven't courted to students up to now, but we did go to the A&M housing fair and kind of priced ourselves as what we call the student affordable alternative, because a traditional student property out there, they'll pay $450, $500 per bed for a 4-bedroom, 4-bath apartment complex. They'll pay $500 for that, right? Well, we can put them in a 2-bedroom, 2-bath, charge them $825 or something, and so they're in at $400 for an entire room, for the whole thing. So it's actually a lot nicer for them, and I think a traditional student property can be a little more party central, whereas we can appeal to more of the studious, serious college student or the graduate student that is there for the reason of getting a good degree.
And how far off campus is the property, would you say?
It's about 10 minutes away.
So not too far.
Not too far. It's up the main 2818, and then you're right by the college. So we have about 10% college student population right now.
Okay.
In addition to it, since we bought it and we didn't know at the time, Blinn Junior College out of Brenham, they have their largest campus there actually in Bryan, just about less than a mile down the road on FM 2818. They're going to build their next largest campus right down the road there, and we're hoping to kind of pick up them, as well as the fact that that development also spurs other development, whether it be Starbucks coffee shops or whatever along the way that also brings in activity and people to the area.
Yeah, so that's a little bit of an additional benefit itself. Is Blinn Junior College is kind of a feeder college that if you couldn't get into Texas A&M as a senior because you weren't in the top 8% or so. I'm learning this right now because my daughter, who's 17, is a junior, and we're kind of figuring out how to get into schools. But if she wasn't able to get in as a freshman into Texas A&M, we would probably put her into Blinn. And Blinn being very close, what a great opportunity for her to be a tenant with you guys.
And they have specific programs, actually, especially into their engineering programs that are guaranteed pretty much that if you go through this program at Blinn, it feeds right in to the A&M program, and they work very closely on that. And that's what this campus actually is being built for, is because A&M is vastly expanding their engineering and science departments there, and this is for that growth.
And then getting back to the transaction itself, did you guys have to go hard with money on day one, or did they give you a 30-day financing contingency?
So we didn't
actually.
So we didn't. It was actually pretty straightforward, regular, like the old days used to be here, even where we pretty much had no hard earnest money up front. We had a 30-day inspection period like normal, and then our financing contingency as well. As Dave remembers, this was all happening at the end of October timeframe, and we had a hard stop of December 31st. It had to happen, or he would back out of the deal. It was a 1031 transaction, and he would back out. And we did have some financing challenges that you folks definitely helped us out on, if you want to talk about that. But we had to end up going into a bridge loan on that. It worked well for us, but we had some definite constraints on that we haven't ever experienced before.
Yeah, some of the challenges that Terry and Susan are talking about is that this property was not fully occupied. With a new sheriff in town with Susan and Terry into the property, that they could raise rents and increase that NOI. So we had to do a bridge loan. And one of the things that Terry has pulled me aside and say, hey, listen, Paul, we need to have a non-recourse bridge loan because we're going to have a couple investors on the property and they don't want to put their name at risk or their personal financial statement at risk. So we have a bridge loan on the property, and that probably comes due here in the next 8 months or so.
Yeah, at the end of this year.
Yeah, so this type of a transaction really was like a 24-month transaction, but it was a non-recourse, and then it modifies into a Fannie Mae transaction at the end if we wanted to do it, or you could sell the loan or sell the property at that period of time. Talking a little bit about some of the fingerprints that you put on the property, Susan. What are some of the things that you do and the Matheny team does that makes these properties better in the marketplace, able to get higher rents and better tenants?
Right. Well, I think curb appeal is always the first thing that you're going to look at. And we like to go in, we have a really great landscape designer. We go in and plant native Texas plants that don't require water, plants that are happy being the shape that they are and growing in a dry climate. So it cuts down on your landscape maintenance costs and beautifies the property. And that's one of the big things that we do, that we've done on all our properties, is really bring it with that native look. We like brighter colors. Then the basic on the inside of the apartments is resurfacing counters so that they look like granite, and coming in with vinyl plank flooring and modern paint colors, some of those things.
That's great. And so how big was your rehab on that property in College Station? Do you remember what the number was for the rehab?
Yeah, that was a $1.1 million rehab. So it was fairly significant. On that property, as I told you, it was an 18-acre property. So the buildings are fairly spread out. So there's a lot of land there. But there is a
Wet Weather Creek.
I call it a drainage ditch, but Susan says Wet Weather Creek. Through it, that there had been a lot of erosion. College Station is kind of in that little sandier soil area, and so there's a lot of just erosion from the property, and so we had to do a whole lot of shoring up of the property with our landscaping. I had one of my broker friends drive through the other day and said, "Man, what rock quarry did you rob?" Because we brought a whole bunch of big sandstone type rocks in to kind of build up berm areas and whatnot to keep the soil in place and get the grass planted with all the other plantings and whatnot. Out of that 1.1 million, that was we probably put $250,000-$300,000 just in the outside landscaping alone on that.
And the roofs were good?
The roofs were in good shape, over our hold term. I'm sure we'll need to be doing some repairs and what to them. And then the other thing we did was we installed gutters and directed the water into areas so we could we directed away from the building to keep the erosion. Did all the painting on the outside. There was a lot of rot repair we had to do. We remodeled the leasing office. Another thing Susan kind of touched on is that the first things that people see coming in are what the first impression is, and that's the curb appeal, the signage. We have a great signage out there, and walking into a nice leasing office. And then, like I said, we have took a little chance on this one. We have a fairly traditional building colors, I suppose, but kind of did some lime green doors and some purple doors and some bluebonnet blue doors, and really kind of gave it a
hip.
Gave it a nice little pop, and I think it's working quite well. So, and then we followed up with reality of we have the interiors that are much better than your standard. We do as Susan said, the vinyl plank flooring. We'll do the brushed nickel plumbing fixtures and light fixtures, all nicely painted up. I'm not one to scrimp on the air conditioning systems either. I know that you don't see that, but people, once they move in, they know it. And so if they're not working well or if they're real noisy, I'll replace those things. And so we had quite a bit of air conditioning repairs on that property as well.
Now, do you guys manage the property yourself, or do you have third-party property management?
We're the property management company. We do have staff. We do all of the asset management. One of the things that I love to do is I oversee leasing and marketing, and I always tell our staff about the 5 senses, that the number one thing is taste, touch, sight, smell, sound. And all of those senses should be really happy when you go on that property. If you go into the leasing office, does it smell good? Does it sound good? Same as the model, same as when you're walking the property. What are you seeing? What are you hearing? And you have to appeal to those senses, because you're only going to get one first-time drive-by. You're only going to get one walk into the office, only one look in the model. And those things all have to be spot on. So that's what I like to focus on with our staff. We have a staff, and we just train them on what to do.
That's great. Anything more we want to talk a little bit about on that Bryan property? What else do you like about that?
I love the trees.
Yeah, that property, as Terry was saying, was 18 acres.
It's 18 acres, and we really must have about 1,000 trees. And I wanted to call it the retreat, because when you get there, you're really leaving the busy world behind, and you go into this comfortable place.
Yeah.
The playground, the creek down the middle. We put in an outdoor fitness area because we didn't have room inside the leasing office. So we have fitness equipment outside, walking trails. And I'm driving from Austin out to Bryan, and I'm just feeling my heart rate go down, my blood pressure go down. I get there, and it's just a big sigh. It's like, And we have an apartment there too. So we live with the residents when we're there, and it's just a great place to be. It's nice.
That's great.
It feels good to be there.
City likes you. You have a good relationship with the
Oh,
city?
let me talk to you about that. I don't want to bash Austin, but many cities are like this. But the nice thing about Bryan, the city of Bryan, versus what we experienced in Austin, trying to deal with whether it be code violations or whether it be permits, whatnot, is that they treat you like a partner out there, in that they know that you are trying to do something to provide, nice, safe, clean housing for their people, as well as raise up the whole area and neighborhood and whatnot. And they look at it that way, and they treat you that way as opposed to an adversary. And the other thing out there is they have, maybe they do here, but I've never seen them. They have a police lieutenant that is actually assigned just to community relations, and he'll come out to the property once a month or something like that, and every week send out reports on crime stats in the area and on your property precisely. And at this point, we own the property 13 months now, and from the first month we bought it until now, we had pages and pages and pages and pages of crime stats. And now we might get 2 or 3 line items, which is usually a domestic disturbance between a husband and a wife or something on the property, as opposed to before there were burglaries and robberies and all sorts of things. And so
they love you.
They do. When the year before we bought the property, they had 555 police call-outs to the property. It was the number one highest call-out property in Bryan as far as police activity. And now we get maybe 2 or 3 calls a week. And it's not burglaries and robberies. It's just domestic questions. Sometimes it's just informational. So the Bryan Police Department love us and have shown in their training that it is actually possible to take a property with a really bad reputation and turn it into a great place to live. So I'm pretty excited about that.
And the last question on that one for me is, how many investors went into the transaction with you? You guys are managing members, but you have a couple.
Yeah, we actually have about 18 investors in it. We could take a few numbers of large dollar investors, because when we first started, we went in as some passive investors on some other deals.
Right.
And the whole idea is that from not 50,000 feet, but from 150 feet, I wanted to learn more about the business that way. And I kind of feel like I'm doing that as well. Mm-hmm. So we let quite a few people in at lower amounts. It gives more people visibility into how to do these in case they want to do their own. There are plenty of people that all they want to do really is supplement the income they have while they're working at a job that they really like. And this is great supplemental income. They don't want to they want to sit at home and get the checks that I send them, right? But there's some that are looking to maybe one day themselves be managing partners as well. So
your investors are happy?
They're very happy. They're very happy. And the key on that, obviously, always with any kind of relationship, is lots and lots and lots of communication. And by doing that, it also is a real big learning experience for them. And I want to say one other thing too is that it's rampant in the industry, probably any industry really, that when we first looked at this property and we were talking to different property managers around, and they're saying, "Oh, you're buying that property? Mm-hmm. Oh, that's a bad property," or blah blah blah. And everyone always thinks that there's something about a location or something about a physical asset, and it's never about that. It's about the owners or the management, and that's what it's about. And we can fix that. And it takes some time to change other people's minds. But after a year now, we have lots of people saying, "Oh yeah, that's a great property out there, right?" Well, it is. It's also it's also great management. Right. Yeah. And in fact, Susan and I won the Bryan College Station Independent Rental Owners of the Year award for this property this past year for what we were able to do out there. So we felt pretty proud about that.
That's amazing, because I know that Susan had spoke with me before we went into the podcast, is that this property that we're at here in Austin is also up for Property of the Year.
Yes, it's one of the finalists for the Austin Apartment Association Property of the Year of this size of property.
150 plus units or 175 plus units. So that's outstanding.
Right.
So I'm going to turn it over to Dave. Dave, let's talk a little bit about this property that we're at right now.
So Terry and Susan, with the Creekside Trace Apartments that we happen to be in right now, and then the beautiful clubhouse. Once again, let's talk about kind of why you guys were attracted to this property. You've obviously done some fantastic improvements to the property, and we can talk a little bit about your approach to the improvements, your signature things that you do. Once again, We just walked the property before this talk, and I mean they've done a fantastic job with the landscaping and native trees and beautifying the whole scene of the place. But if you guys want to just quickly talk about kind of why you bought this property and what attracted you to it.
Yeah, so this was our third property we bought in Austin. So we bought it in 2013, and our first property was 2010. But our first three properties were three smaller properties, and they were actually all right next to each other, so they were fairly easy to manage in that way. And they totaled 154 units, and so it wasn't a huge leap to go from there up to this, as well as we're only about maybe 4 miles from where those were, and so we understood this submarket very well, knew exactly what the problems with this property was, besides the physical problems. I can always fix physical problems. It's what's in the area and what management do I need to do to fix it. And so we felt like we knew exactly what to do because we knew the market, knew the rents, knew the area and whatnot. So, this is like 1984 property, so it's kind of in the age range of what we have bought and owned before and knew what to expect. So it just fit our profile quite nicely. Now, the funny thing is that when we first started investing, this was one of those properties we kind of drove by and said, hey, that's kind of a neat property. It'd be kind of neat to own that one day, kind of, in a half joking manner because we were so far from even ever able to think about that. But, maybe it planted some little seed there.
So what were some of the first things that you saw in the property that needed to be improved? I know there's the management and the marketing and all that kind of thing, but what were some of the obvious things that stood out to you when you first came here and thought, man, we need to do this first. This is really going to make a big difference to our model?
Well, first off, the water heaters were dysfunctional and residents were complaining of not having hot water. So the very first thing that we went in did was we got rid of the boilers, replaced the boilers. We had to replace a lot of the plumbing out there by the boilers because they were full of sediment. And that was our number one thing, is let's make sure that our residents have their basic needs met. So we went in first, we did that, and we upgraded the swimming pool. It had a hot tub that had been filled in with concrete and was an eyesore. The fencing around the pool looked like you were walking into a prison. I really felt like the barbed wire that was around the fence was uninviting.
Yeah, the razor wire on the property kind of didn't really set a nice tone for the property, did it?
No, it didn't. But when I walked the property, the stone on the walls, the siding, the arrangement of the buildings, the trees that were already here, there were courtyard areas that you could walk through and see these gorgeous trees and no plants underneath it, just rocks and dirt. And I could see how it would look once we had the right plants in there. So it's kind of, you don't get deterred. The first property that you go to is a little bit scary because you're not knowing, can I fix this up? After you've done it a few times, then you look at a property that's a little tired and you go, I can make this thing shine. So
you had
I have to feel that.
You had the vision.
You have the vision, and you know that you can do it because you've done it before, and you know you're going to make a better home for people, and it's exciting.
Before you had the vision, did you have to call upon an architect or an engineer to give you kind of ideas, or did that just something come internal to you that let's put plants around the trees and let's take this out of the pool area?
Well, some things were pretty basic to know that we were going to take out that big concrete block out of the swimming pool because it was unsightly. And we always go in with architects in terms of if we're going to rebuild something. And we have a landscape designer who specializes in native plants. So we walk the property with her, and she takes it from there.
Did the seller just run out of money? Is that the reason why he was selling it?
Yeah, this was an interesting one. This was your typical classic book case, I would say, that I read about the books. And it was a trio of siblings, 2 brothers and a sister, all in their 80s, that owned this for a long time out of California. And they were just old and tired. And they could have put more money back into it, and they could have revamped it up and got it zipping, but they were done, right? They were done. And so it was just time for them, get out of the business, and we stepped in.
So fantastic, man. And we walked the property right before we started the podcast, like Dave was telling me, and it's amazing what you guys have really done. The fence around the property doesn't contain barbed wire or razor wire on the property. It's taken down. You guys have put a brand new fence around the property, kind of a horizontal slat property. that really adds a great look to the property with exposed wood on the property. The clubhouse that you guys have put down with the ceramic tiles on the floor, fantastic. I mean, you guys have done a great job. So I'm starting to appreciate, Susan, your vision on what you're doing. So that's wonderful. Would you ever think about possibly selling this asset in the future?
Actually, it's on the market right now. Okay. And why? Right? Why is it on the market? It's a good question because we love it. It's easy to run. We've done really a lot of great things here. But as I was alluding to a while ago, and why we had moved out to College Station is the market is really, really hot here. And there's just some good capital gains on the table that are hard to bypass.
Well, talk about the Austin market. I mean, you guys live here, you work here, you have properties here. For somebody that's looking to come into the Austin market, what's your advice?
So, Paul, here's the thing. It's like for the price that some things are selling for now, I can look at it and say, wow, it seems really high. But if I then do, from a seller's point of view, do a market survey, see the job growth in the area, see what's happening in the area and whatnot, I can see that exactly why they're buying because it's got room to go and grow more. Right. So there'll always be. I don't yet see any kind of a peak or plateau or anything. I see that they're good and solid, and at the very, very, very least, I think it would plateau, but I don't see any of that. And there's great growth in the area. Austin, you folks are from Dallas. I know Dallas is a pretty cool place, but Austin is like the jewel of Texas, right?
It is, no doubt about that. If I could move down here, I would.
It is very attractive from the outside, especially, and the growth here has just been incredible. And I don't think anybody sees it slowing down at all.
But the attraction right now for you guys as investors is really to take a look at some of these secondary, tertiary markets like College Station or possibly Waco or maybe even getting into some other different types of asset classes instead of just having market rate properties or workforce housing. Maybe you could take a look at, say, student housing or things like that. So are you starting to expand your vision of what you want to do?
Yes, we're definitely looking at different types of properties. Student properties are kind of appealing to us now. It'd be fun and different. And I think we still come in at the affordable housing, student housing. We're in the affordable housing conventional. It's fun to consider different kinds of demographics that you're marketing to.
And I think really the exact same principles apply there. The curb appeal and the amenities at the property. One thing I wanted to mention, what you were talking about a while ago, is how good it looks here with the landscaping and the fencing and whatnot. Yep. And to us as owners, it's kind of makes us feel pride of ownership. But what it really does is the residents see that they're living in a nice place and a place that's kept nice and looks good. That makes them want to be better and be cleaner and enjoy their location and not think about looking for someplace else to move. And so it's really a win-win all around.
Also, when we're fixing up a property, one of the biggest things for me is, can I make a better quality of life for the people that live there? And I think the highest measure of, is this property a good place to live, is, would I live there? Or would I want my children to live there? And one of my children did on her own come and lease at this property. She's renewing her lease. She didn't get any special deals.
At market rate.
At market rate. And that's important to me. I have to feel like when we go into a project, can I make this home? Yeah. Can I make this where people want to live? We're not slumlords. Yeah. For sure. We're putting our own kids, we're letting our own kids live here.
That's great. That's fantastic. So, I see big smiles on your face. You guys enjoy what you do. You're good at what you're doing. Your investors are happy, and you guys are just continuing to go with great steam ahead. Any funny stories in real estate that you can think of off the top of your head?
I can remember on our first property, I was the property manager on our first property because it was small. And one day I walked up to the office and there was a rooster running around inside our swimming pool enclosure. And that was kind of strange to see this rooster. And what actually had happened is someone had gotten an Easter chick that turned into a rooster that had been kept inside the house, got out, and there it was. So we named him Cogburn because it seemed appropriate that it should be Rooster Cogburn. And then we rehomed him to somebody that had outdoor space for him to live. That was pretty fun. Terry, can you think of something?
Terry's shaking his head no. At least the stories that he could tell would be not G stories. So we'll just end there. Anything that we would want to talk about that people would help you if they were in the same position you are? Is there anything that you could educate other people for?
My best advice is first get educated, read everything you can, study and learn, find a property, and then the number one thing is to jump into your fear, through your fear, and take the step. Because a lot of people will kind of stand on the edge and go, and they're just too afraid to take the leap. But you gotta leap through your fear to make it happen. And I hear that over and over again with people that we talk to who are considering it. Can I do this? You can. You have to put your fear behind and just go through it. That's my number one advice.
Well, and I think one thing that our mentor, Del Walmsley from Lifestyles Unlimited, talks about in kind of opposition to what Robert Kiyosaki says is Robert Kiyosaki says, learn from everybody's failures. If you haven't succeeded, you haven't failed enough times yet. Fail to success. And our mentor teaches us that you don't fail to succeed, you succeed to succeed. And you surround yourself by successful people, and you learn the best practices that they do. And this is what Investing Group Lifestyles Unlimited has done for us, is to be around others that have done these things before, that there is a method, there's a generally accepted method that this works. It's not that there aren't other things that work, or maybe other things that work better, but these are some things that work, and at least start there and develop your own specialness from there. But what Susan said, don't be afraid. But as an engineer, the other problem that people have that I could be prone to is analysis paralysis, is figuring it, and you can convince yourself a billion times that it's perfect and convince yourself a billion times that it's not perfect, and you got to really kind of go with the gut on some things and just make that leap.
Yeah, one last thing I need to say is get educated, join the apartment association, and run your business so that any professional association could come in and pick up where you left off, and that you just have to be part of the professional association.
All right, guys, well, thank you very much. If someone wants to reach out to you, what is the best way if someone wants to contact you guys?
I suppose our email, our property management company is called Austin PMA. To some extent, you might think as property management associates or something, but it actually stands for positive mental attitude. So you can probably hear a lot of that in Susan's voice when she talks. But our domain is AUSPMA. So basically just contact me, Terry, at AUS as in Austin, and then PMA.com. That'd be fine.
Well, that's fantastic. Boy, Terry, Susan, Matheny, we can't thank you guys enough. We do appreciate your business at Old Capital, and thanks for spending some time with us in the podcast.
Thank you.
Thank you. I appreciate it.
Thank you for listening to the Old Capital Real Estate Investing Podcast. Please join us at oldcapitallending.com to sign up for our weekly email updates. We'll see you here next week with another great interview.